Welcome to Pressure Points. Our topic is the opportunity for Nvidia to restart sales of their H20 chips in China. As of this afternoon, Bloomberg is reporting that the Trump administration is considering that move. And I want to preface this Pressure Points with there's going to be a lot of numbers here. And kind of the bottom line is that at the most basic level, the street is looking for next year for growth of 49%. And if they turn back on H20, that should get the growth back in low 70s, 72 to be exact, based on my math. If they add back in the H20 revenue kind of in the run rate that they had talked about a few months ago. And so streets at 49%, could go to 72. As far as the stock, it went up a couple percent on that. Then it's given it back. It's kind of where it was before that report came out. The overall market's pulled back a little bit too. Needless to say, a lot of cross currents in the market right now. And also, needless to say, that if China turns back on, this would be a material win for Nvidia investors. And so I'm going to start with the highest level about kind of the political environment around this. Is that based on my conversations with former people who worked in the first Trump administration around trade, is that this Nvidia card has been an important part of the conversation for the US and China. And I think that the fact that this is held up, despite all of the rhetoric from China about them wanting to do their own silicon, the fact that they still care about having these chips, getting a hold of these chips, I think is evidence of, I think, the technical chops that Nvidia is bringing to the table. And so I think that that's just one positive read on this. Separately is that Jensen's view has been that he really wants to advance the chips business in China because his take is it's a big opportunity for them, but also from like the perspective of the U.S., it will allow, if they're not selling those chips, it will allow the Chinese manufacturers to amp up production, and therefore it could make kind of a competitive headwind, stronger competition. So essentially, you want to provide those chips. You don't want China to make those chips. That's just the general geopolitical environment. Now we're going to shift gears and talk a little bit about the impact to numbers. I mentioned that 49% goes to 72% if this is turned back on fully. But the context to that is back early in the summer, midsummer, there was this talk that China would be turned on again. And of course, they can't sell their most advanced Blackwells. But Jensen had made a comment that they could do 50 billion in China revenue this year, so calendar 25, 50 billion in China revenue, and it was growing at 50%. Now, presumably that demand was increased and there was pent up demand, so they could do more than that. But let's just take that $50 billion number. When you look at what the street's looking for next year in terms of revenue, which is about 330 billion, just under 330 billion, you add 50 billion on top of that, and that's how you get to that 72% growth rate versus the 49. So that's that context. The third piece I want to talk about is, what if this doesn't play out? What does it mean for numbers? And my sense is, and spending a lot of time being an analyst, I think as I really looked at the street numbers, it seems that the street is mismodeling what the back couple quarters of next year look like. And that is also in the context that they just raised their numbers. That 49% growth for next year compares to 3 months ago, the street was looking for 34% growth. So it's gone up pretty dramatically. But if you take a closer look and take into context that the first quarter, the January quarter, is going up against a tough comp because January of 2025 had about 7 billion in China revenue in that. And so right now the street's looking for 65% growth for January of 26. If you would adjust that and basically remove 7 billion from last year to get an apples to apples comparison about how the core business is doing, the business would be up 100%. So I think that's just an important takeaway, is that on a apples to apples basis, their business is growing 100%. Now, the April quarter had a partial quarter. They booked about 4.5 billion in China revenue. And so if you make that adjustment, right now the street's looking for 60% growth for April, and it would be about just over 70%, mid 70s. And so you kind of get that 10, 15% higher growth rate. Now, the part that sticks out to me is if you look at the final 2 quarters of next year, the street drops pretty materially. We go to 50 and 43% growth. So that tells me that, but the comps get easier at that point too. They get dramatically easier because now we're not comping against that China revenue. And so my sense is that analysts are really anchoring their modeling on that comment about that 500 billion in Rubin and Blackwell revenue that Jensen talked about on the 28th and then also talked about on their call. But I don't think the street is necessarily really looking at the dynamics of the easing comps based on what's going on with China. And so they did talk about, CFO Colette Kress did talk about that there's opportunity to have additional sales. And I think when you kind of put all of this together, I would say that if the China gets turned on, they're probably going to grow next year at 75% plus. And if it doesn't get turned on, they're probably going to grow at 60% plus. The street's at, again, 49%. So it feels like both of these outcomes are to a better place than where the street is expecting. And again, that said, let me wrap up that I think that there's some context here that this is just falling on deaf ear. All this good news right now, investors generally don't want to hear it because they just have a sense that this is as good as it gets. And therefore, there's this profit taking that's going to go on the broader AI trade. We have a different view on what's going on. We think we're still early, but that's the context and the pressure point for today. On behalf of Pressure Points, bye for now.